Joining me right now is Andrew Holland, CEO, Investment Advisory at Ambit Capital, joining us from Mumbai. Andrew, great having you with us on NDTV Profit. Let me start off by asking you, what's your assessment of where we are at this point of time? It's a case of one reform a day, and that's the run rate that I'm talking about. But the sense is that somehow the euphoria that it created a month back somehow has dissipated. And even though yesterday we saw the land acquisition bill finally being approved by the group of ministers, somehow it's not really reflecting in the form of FIs rewarding by investing aggressively into the markets. What's your sense? Do you think events of the last couple of weeks have dented sentiment?
No, I don't think they've dented sentiment. I think basically what happened is in when we were having all these reform measures announced by the finance minister, a few things. The backdrop to that was you had the European Union commenting on being unlimited buying of bonds in Europe. You had Fed QE3, so you had a liquidity-driven rally globally at the same time. And for India, we've just been waiting for some form of reforms, and we got that. But I think our expectations then became a little bit greedy, didn't we? We wanted a reform every week or every day to keep us going. Now, the last set of reforms in terms of insurance and pensions, and even in the Land Acquisition Act, would have to go through Parliament, and that's a little bit more tricky. Obviously, we have to see if Parliament will actually open in November, or it might be delayed. So whilst the slew of reforms will continue, I don't think it's going to drive the markets much above 5,700 in the short term. And that's really where we've been expecting the market to kind of settle. There's been nothing we've seen on the fiscal deficit in terms of any movement there. So, net, yes, it's built confidence, it's made us hopeful, but it really hasn't changed what's happening on the ground yet. Although the corporates I speak to are feeling a lot happier than they were, say, a month and a half ago.
Andrew, you mentioned the fact that markets are unlikely to move above 5,700. Where's the thought coming from? Are you talking about the valuation aspect here? Is that slightly getting stretched, because of which you become uncomfortable every time the Nifty tries to move above the 5,700 mark?
Yeah, I think valuations are pretty fair at the moment, but you have to look at what the catalyst will be, and I think what we're seeing at the moment is some good news coming through in Europe, where Spain hopefully will come for a bailout package, or there'll be some form of package given to them. Greece looks to be kind of being brought back into the pack again in terms of the European Union, and the growth in the US, whilst it's still subdued, there is some growth. So globally, it's supportive at the moment. But in India, after having that run up, you're bound to come into an earnings season, which we know is going to be poor, with no real incremental news which will move the market. So what I'm looking for actually is in November, is when there's a change in leadership in China, which is a once in a decade kind of change. We might see some stimulus package or some talk of accelerating the growth in China going forward, and that could be a catalyst for global markets, including India, to kind of move forward quite strongly as everyone chases performance at the year end. So I could see the Nifty getting to 6,000 by then.
Andrew, we are almost a week into the earnings season. Infi came out last week, Mindtree came in yesterday, HCL has come in today. What's your initial sense on how technology space and the earnings have come out? Mid caps have been slightly disappointing. Infosys was again, I think, disappointed a lot of people. Guidance factor was a major one there. HCL Technologies has surprised everybody again by a robust performance. How do you see the earnings happening in the IT space in particular?
Yeah, I mean, I wasn't that disappointed with Infosys. I mean, the results were in line with expectations. I think, the change of the CFO kind of threw things out a little bit in terms of, is there more management changes, is there more problems at Infosys? But I thought it was okay. I didn't think there was anything to get unduly concerned about with Infosys results. I don't look at Mindtree, but I mean, from what I can see, they've delivered, but ratings have moved forward quite significantly. So again, maybe a period of consolidation there before that stock moves. and as you said, HCL Tech has come out with some good results. So net, I don't think it's a bad kind of results for so far in the results season from the IT sector. Given what we know has been happening globally, it's only been the past month or so that we've all feeling a lot better in terms of the stock markets, but corporates around the world are still facing headwinds, which they're managing to maneuver through. So I feel kind of okay in that. But a year down the road, I think we'll start to see the growth in the IT companies start to accelerate again as the global economy starts to pick up, albeit slowly, starts to pick up from where we are today.
How would you approach this market? Would you be stock specific? Would you be sector specific? The kind of approach that you would take, and sectors that you like from an investment standpoint?
Yeah, so we haven't abandoned the defensive sectors, which was probably the easiest thing to talk about when the markets were moving rapidly up in the last month. We continue to keep with our pharmaceuticals, with the consumer goods, and selectively we've kept in terms of the IT stocks, we kept more with the mid caps, and a favourite of ours has been the Satyam Tech Mahindra merger. So that's one of our favourites. And what we're thinking now is, if you have that run, as I said before, towards 6,000 by the end of the year, then undoubtedly high beta will perform in that scenario. And whilst we're not saying you should go and buy every high indebted company with questionable management, there are going to be winners throughout the whole host of sectors, and it's a matter of picking the right stocks. I'm not saying that the returns will be better than some of the highly geared questionable management companies, but you'll still get very strong returns, and those are the companies you can tuck away and hopefully see some very strong gains. So we're being very selective in the companies that we're buying. So for example, if you take real estate, all real estate companies have moved up, and you can understand the reasons in terms of high debt and so forth. But you've got to look at the leader, and the leader is DLF. Yes, it has its the problems at the moment from a political standpoint, but once that washes through, then they would be the major beneficiary of lower interest rates, which we expect going forward. If there's a pickup in the economy, they'd be, obviously given their reach in the country, they'd be a beneficiary of that, and obviously along with asset sales as well. So, those are the kind of companies you would look to buy. I'm not saying that you shouldn't buy other companies below there, but I can sleep a little bit more easily with companies where at least the management has some kind of corporate governance.
I want to elaborate a little bit more on the sector, but on the interest rate sensitive segment here, particularly if you can comment about the auto space. This is one sector which has been in the mid of news flow for all the right and all the wrong reasons. Maruti versus M&M. How would you rate the two companies? There's been a lot of churn that has been happening with Maruti entering into the 800 segment. I would say re-entering into the 800 segment. A lot of investors believe that it stands to benefit incrementally. The market share that it had lost once it phased out, the 800 could be back. M&M on the other hand could have to grapple with the diesel price hike issue. How would you rate the two companies? Would you recommend a churn, exiting M&M, getting into Maruti?
Yeah, that's the favourite call at the moment by most brokers. We've been buying Maruti. We like the fact that they've got a lot of new products coming through, and that obviously the launch of this or relaunch of its car will start taking market share. But I also like what Mahindra's been doing as well. And I think I would have both. In fact, we do have both of these stocks. We like both of them on a long-term basis. Mahindra has quite a lot of new car launches coming through as well, and I think both will continue to take market share. So, yeah, you can make the switch. Mahindra was outperforming Maruti, for the past quarter or so, and you can make that short-term switch. But I think on a year's basis, you'll make money from holding both of these stocks, and that's exactly what we're doing.
Andrew, any preferred bets in the infra space? Recent news flow has been supportive. The land bill getting approval. However, as you rightly mentioned, some of those bills have to go through the parliament. So that is a big if on those. But any preferred plays in the infra space? I know it's a very vast sector with various subsectors involved. How would you approach this space?
Yeah, I mean it's a difficult one because again you can look at it from many different viewpoints, but again we've been picking up the leaders. We've been looking at the Larsen & Toubros, the BHELs. Have we jumped down? Yes, we have, and in a shorter term kind of trading viewpoint, looked at some of the more highly geared infrastructure companies, and that's paid off. But I think you rent these companies, you don't own them, if you know what I mean. In terms of these rallies, because there's still a lot of hard work that a lot of these companies have to do. So sticking with the leaders for the moment, we'll look down below that. I think as plans unfold from the government, I don't think the coal issue has gone out of the window yet. Land acquisition, I think, is going to be a difficult bill to bring through, and the confidence is not there yet that you're seeing huge amounts of spending on infrastructure or foreign direct investment coming in. So I think the combination of those I'll need to see first.
Just one final question, Andrew, before I let you go, is if you can comment on the banking space. Yesterday reports suggesting that one of the small private sector banks was up for grabs by the large one. Would you still approach the banking space with private sector versus public sector on valuation versus asset quality argument, or is there another way to look at the sector also?
No, I think we're going to continue with the private banks for the time being. I still think we're kidding ourselves if we think because there's been a slew of reforms in the markets better that the restructuring and non-performing loans is going away from us. I don't think I need to be in PSU banks yet. If there is a takeover in the sector, yes, you'll have that initial run-up and excitement in the sector. But, I don't like to chase things where the fundamentals don't justify it. If rumours go away or takeovers don't happen, then you're really left holding a stock which you didn't want to have. So I'll keep with the private banks for the time being.
Okay, fair enough, Andrew. Thank you so much for your time. Great having you with us. It's always a pleasure.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.